Hi guys. Today we will analyze Emerson Electric stock, and calculate its intrinsic value using two different valuation models. Enjoy! Hit the like button and subscribe to my channel if you want to see more videos like this. Technical analysis. The stock has been an average performer in the overall market. However, recent evolutions are not positive. The short-term trend is negative, the long-term trend is negative. There should be more interesting stocks out there. Strong support levels are around $78 and $71. Next strong support levels are around $63 and $59. Strong resistance levels are around $88 and $92. Next strong resistance levels are around $98 and $100. In the last month the stock has been trading between $76.80 and $92.20 range. It is currently trading near the lows of this range. The stock has an average volume of 3.2 million. This is a good sign as it is always nice to have a liquid stock. The stock has been in a downward trend since September 2021. Be careful. Intrinsic value. Buy low, sell high. We have heard it many times before. But how to know when it's low, and when it's high? The intrinsic value of a stock is its true value. It refers to what a stock is actually worth, even if some investors think it's worth a lot more than that amount. Intrinsic value is important, because it can help investors understand whether the cost of a stock is undervalued, or overvalued compared to the market value of the stock. Let's calculate the stock's intrinsic value. For more accurate results, we will use two different valuation models to calculate the intrinsic value of the stock. Discounted free cash flow model, using the formula below, then, valuation based on earnings per share, 5-year average P/E ratio and expected growth rate. First model. Discounted free cash flow valuation. This spreadsheet contains some financial data that we will use for the stock valuation. We see that the average revenue growth rate of the stock has been around 5% per year, for last 5 years. We see that the average profit margin of the stock has been around 12% per year, for last 5 years. Also we see that the average free cash flow to net income rate of the stock has been around 110% per year, for last 5 years. And we expect 8% per year average stock market return. Now, let's consider 3 different scenarios for Emerson Electric Company: bad, average, and good. First scenario. Emerson Electric will have bad performance in next 5 years, and we will use the following parameters in our calculation. Future revenue growth rate would be low, 4%. Future profit margin would be low, 11%. Future free cash flow to net income rate would be low, 90%. In this case, the fair value of the stock today would be $49. Second scenario. Emerson Electric will have average performance in next 5 years, and we will use the following parameters in our calculation. Future revenue growth rate would be average, 5%. Future profit margin would be average, 12%. Future free cash flow to net income rate would be average, 95%. In this case, the fair value of the stock today would be $57. Third scenario. Emerson Electric will have high performance in next 5 years, and we will use the following parameters in our calculation. Future revenue growth rate would be high, 6%. Future profit margin would be high, 13%. Future free cash flow to net income rate would be high, 100%. In this case, the fair value of the stock today would be $67. Second model. Valuation based on earnings per share. This spreadsheet contains another financial data that we will use for the stock valuation. The current earning per share price for the company is 4.78. Minimum rate of return. I will use 10%. Because when we invest in individual stocks, we are looking for a higher return than the S&P 500. For Emerson Electric, analysts forecast growth rate around 6% per year in next 5 years, and future P/E around 16. Again, I will use 3 different scenarios for Emerson Electric Company: bad, average, and good. First scenario. Emerson Electric will have bad performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be low, 4%. Future P/E would be low, 16. In this case, the fair value of the stock today would be $46. Second scenario. Emerson Electric will have average performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be average, 5%. Future PE would be average, 18. In this case, the fair value of the stock today would be $57. Third scenario. Emerson Electric will have high performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be high, 6%. Future PE would be high, 20. In this case, the fair value of the stock today would be $68. As you can see, today the stock is overvalued, $82, even if we expect the company's high performance in future. While the company has a good profitability rating, there are some minor concerns on its financial health. Also, the stock is expected to show a small growth in revenue in the next 5 years, 5 to 6% yearly. Based on that, the stock looks overpriced at the moment. The stock has been in a downward trend since September 2021, and it can go lower, before it recovers. The company is a dividend king. I may consider buying the stock for the dividend, when the stock drops below $67. Company's strengths. Emerson Electric is an American multinational corporation that manufactures products and provides engineering services for industrial, commercial, and consumer markets in the Americas, Asia, the Middle East, Africa, and Europe. Emerson has 170 manufacturing locations. Emerson is enjoying strong demand in heating, ventilation and air conditioning, and improving demand in refrigeration and tools, while discrete and hybrid automation markets lead a recovery ahead of process industries. Robust financial performance, supported by their pricing power and business niche, helps the company navigate this challenging market environment. Emerson has good footage in the green projects, which is expected to be positive with the government's initiatives and transformation of the energy sector. Management seems likely to reduce its oil gas exposure further, but a lot of the core automation technologies could be applied to new markets, like hydrogen. Emerson is a dividend king. The company has raised its dividend for impressive 60 consecutive years. The stock currently has 2.5% dividend yield. The company's return on assets of 10%, return on equity of 27% and profit margin of 15% are amongst the best returns of the industry. Risks. The company's business is sensitive to commodity cost inflation, as its products require steel, copper, iron, electronics, aluminum, brass, plastics and petroleum-based chemicals. The company's profits could be hurt by substantial price volatility, or the unavailability of any of these inputs. The company will face more international competition, as rivals in developing nations, particularly in China, gain the technical skills needed to compete in top-tier product categories. As many countries prefer, and/or mandate locally sourced products, new local competitors in these markets would have a distinct advantage, despite Emerson's established position. Management recognizes that the rise of strong foreign competitors is inevitable, and has focused on making Emerson as local as possible, through its hiring and sourcing practices. Domestic competition is a threat as well. The company has global operations, and is thus subject to changes in global economic conditions and outlooks, as well as to negative currency effects. Based on estimates for the next 5 years, the company will show a small growth in revenue. The revenue will grow by 5 to 6% on average per year. The earnings per share is expected to grow by 8 to 10% on average over the next 5 years. Thank you for watching. If you found this video helpful, please hit the like button and subscribe to my channel.